Spaniard here. It is the 29th of September 2025, and for the last year I've been having a bit of a nightmare with regards to cars. I've owned quite a few of them, and quite a few have all been buggered up, right, for one reason or another. Anyhow, to cut a long story short, during that period of time, there was a 3 or 4 month section earlier this year where I'd been given a car by one of the Jedi, and I went to get the car insured, right? No problem, taxed it, and then took it to go and get checked out with a local mechanic, who, after a couple of months of having the car, decided that it was a write-off and I shouldn't be driving it. Hey ho, right? Just one of the nightmares I've had with cars this year. I then decided to cancel the tax, sawn the car. I ended up scrapping it. It then came down to cancelling the insurance, right? So I phoned up Admiral Insurance. And this is where the contents of today's presentation kind of originate. This is how it all kind of came to light. So I phone up to cancel the insurance, and the guy tells me there's a get out fee. Okay, 60 quid to cancel the insurance. Now, the insurance had been set up on a monthly direct debit. So for most of you, you'll be aware that you go to set up your car insurance, you're given two choices typically. You can either pay it in one go or you can pay it monthly. If you pay it monthly, you end up paying a little bit more than if you paid it in one go. But as it turns out, upon investigation with Admiral, there was in actual fact a loan. In other words, what would have been a single premium insurance policy was actually financed by a loan because I wanted to pay it monthly. All right. Now, here's the deal. If a company is going to sell you a loan, this is all regulated nowadays, right? I mean, we're talking about a loan which is regulated under the Consumer Credit Act 1974. Well, this is all governed now by the FCA, right? The Financial Conduct Authority. You have to go through things such as, and comply with things such as responsible lending. You have to do income expenditure checks. You have to make sure people can afford the payments. I mean, that's just one of the requirements that's placed on lenders nowadays, right? If they're going to grant a loan, an official loan under the Consumer Credit Act. Yet here I was cancelling an insurance policy. Yeah, I knew it was monthly premium, but I didn't know that it had actually been financed by an actual loan. All right. So in other words, and this has got some big implications for people. So please, especially if you're having a few financial difficulties at the moment, stay tuned. All right. Because this is going to be really important for you. Right. What I wasn't aware of is that it was an actual full-blown personal loan agreement which had financed the single premium insurance and paid for the single premium insurance up front. So, what's the big deal? What's the big deal, Si? Why are you even on here telling us this stuff, right? I mean, now that you've said it, it seems kind of obvious. Okay, well, look, number one, I've already mentioned that there's an issue with regards to the way in which this is actually sold. If someone's going to sell you a loan in that way, then they have to comply with certain regulations in terms of how that's sold. They have to go through various checks. They have to make sure they comply with various advertisement requirements, right? And they have to explain completely what you're doing, what the implications of non-payment are. And of course, they have to make sure that you can afford it and so on and so forth. None of that takes place with regards to car insurance. They never ever worry whether you can afford it or not. Okay, they just give you the two options. And if you choose the monthly option, it's kind of guaranteed you can have it. But the real problem for insurance companies comes about should you experience financial difficulty. Because normally what will happen is that if you are unable to pay what I'm going to call premiums, but they're not, right? They're not premiums. They're actually monthly loan repayments. If you're not able to repay the monthly loan repayments, they automatically cancel the insurance policy, right? But hold on, hold on. If you take a loan out to pay the single premium on an insurance policy, then the insurance policy is bought and paid for. Done. Now what you're paying back is a loan. You with me? You say, I want to pay this monthly. I could pay 500 quid, up front as a single premium and have my year's car insurance. I could do that, but actually I don't want to shell that all out at once. I'd rather pay monthly. So I'm gonna opt for the 50 quid a month over 12 months, which is 600 quid payback. I'm gonna elect to pay that way, all right, which means that without telling you, the company has just set up a loan agreement, right? It's all done with digital ticks where you don't even see the loan agreement, right? I never saw the loan agreement. So you don't even see the loan agreement. You tick to say that you want the monthly option, but what's actually happened is you've been sold a loan. Now the loan for 500 quid has paid the insurance premium. So the insurance policy is bought and paid for. Done, dusted, paid for, gone, forget about it. Now what you're paying back are the 12 payments of £50 per month, right? Total payback, 600 quid. That is a loan. So if you hit difficulty, right, your car insurance policy should not be cancelled because you're not paying back the car insurance policy. The car insurance policy was already bought and paid for day one. What you're paying back is a loan. It's just that they never told you it was a loan. So what tends to happen is that you can't afford to pay. They, behind the scenes, they cancel the insurance policy and then they just chase you for an outstanding balance, which they portray to you as being the insurance policy, when in actual fact, it's for a loan. Now, this opens up a can of worms for the insurance companies, right? And let me just make this clear. I'm not necessarily suggesting that you go out and obtain a car insurance and then just stop paying it because now you've got a loan to deal with, because you'll probably find yourself getting blacklisted by insurers, right? So I wouldn't say that that's a wise thing to go and do. However, it could be that you've experienced financial difficulty, you need the car to go and get a new job or whatever the case may well be. And had you been given an extra couple of months of being able to use the car, then things may well have fallen back into place and you might have got yourself sorted out. Whereas if they cancel the insurance straight away, it kind of drops you in it. What I'm saying is that there are circumstances where people have been dropped into that kind of situation and the insurance policy has been cancelled when it should not have been cancelled, right? That is a bit of a scam going on, right? And it's all because they're not telling you what's really going on in terms of the setup of the insurance policy and how it was originally financed. Now, I'm telling you, I noticed this years back, right? But I've been dragged off into different areas of research and different things in my life to deal with. And it's only really because this issue came up recently that I've kind of, oh yes, I see they're still at it, right? I first came across this back in 2002, 2003, right? And you should find that the same is probably applying to your buildings insurance and your contents insurance should you pay them monthly. There are actually hidden credit agreements. So of course there are various implications, right? Various implications. And as I say, let me just emphasize this point. I have addressed this before, I've presented this before, And a lot of people, I actually got attacked for it from some quarters, people that just can't get their heads around it, right? Various parties that consider themselves very intelligent, but clearly ain't that intelligent, right? I mean, it's not a difficult concept, right? If you're taking a loan out to pay for something up front, including, in this instance, an insurance premium, then the insurance premium is bought and paid for. That's it, right? Inability to pay the loan is a separate issue.
See